Picture this. Bitcoin just spiked to a record high. Your screen is lit up, your stomach knots. The price still climbing without you. You should be celebrating, but instead, something feels off. Everyone's cheering on that rocket, and you're on the launch pad. Instantly, your heart races. You feel a twinge of panic on missing out. That sudden panic, it isn't just in your head, it is your head. Here's the thing. When we see a crypto surge, our reward system lights up as if we've already hit the jackpot. Expecting a gain floods the same brain regions as actually getting it. It feels like winning even before we play. At the same time, an ancient part of our brain, the amygdala, our fear center, screams, "Don't miss out." In that moment, we're not rational. We're cornered by excitement on one side and fear on the other. Our logical prefrontal cortex is barely in the room. In short, crypto FOMO hijacks our brain's dopamine reward circuits and fear response, creating a gut-wrenching tug-of-war. We feel pulled towards a potential win and terrified of being left out, even if logically, we know the swing could kill us. Think of us as stick figure characters on a screen. One stickman is calm and carrying books, our rational brain. The other is wide-eyed, pocket full of cash, fixated on the charts, our impulsive brain. The market line shoots up off the screen. The impulsive stickman yanks his lever and buys in. The rational stickman grabs his friend. Wait, isn't this at peak? But the impulsive one pushes him aside and fires a rocket into the coin. Boom, it soars higher. This is the conflict inside all of us when FOMO strikes. On one side, gambler's hope and herd instinct. On the other, calm analysis and risk management. Neuroscience shows we often lose this fight. For example, research finds crypto investors have overconfidence bias, believing they can predict the market while underestimating risk. 3. Meanwhile, confirmation bias kicks in. We grab every tweet or TikTok that says "to the moon" and ignore warnings. It feels like the rational you is screaming in the background. We studied finance, we read charts, but the primal part says, "Buy now or you'll never forgive yourself." Why FOMO wins brain chemistry? Each social media meme or price alert glitters our brain's reward system. In fact, anticipating a crypto gain triggers the same dopamine rush as actually pocketing profit. That's why we scroll endlessly for Bitcoin updates. The chase is its own high. But at the same time, our amygdala is lit. Missing a surge feels like a threat to our survival. It's literally fight or flight. When prices zoom without us, our amygdala reacts as if we're in danger. In short, our brain treats FOMO like physical pain. Social proof and hype. We are wired to look at others for cues. If everyone on Reddit and TikTok is celebrating a moonshot coin, that herd vibe alone can convince us it's a sure thing. Social proof hijacks. Logic, seeing friends or influencers list their gains, ignites envy and urgency. Neuroscience says watching others get rich spikes envy and longing. Suddenly, our inner voice. If they're doing it, who are we not to? Biases and bubbles. Behavioral research shows individual crypto traders underestimate risk and chase trends. One study found big price jumps spark mass buy-ins, driving prices higher, fueling the next jump, and so on. This feedback loop creates bubbles. When FOMO pulls, people buy at peaks, inflating a bubble that eventually pops. The result? Violent crashes and ruined portfolios. That's why seasoned experts warn, FOMO can kill returns. Real data, shocking as it sounds, nearly everyone admits to falling for FOMO. A Kraken survey found 84% of crypto holders have bought on FOMO, 81% on FUD, fear, uncertainty, doubt. Even crazier, 63% say emotions actually hurt their portfolios. Think about that. Most traders know they're shooting themselves in the foot by panicking. And it's not theoretical. Bitcoin itself can drop half its value in months, a 47% fall right after FOMO peaks. Mental health, underlying all this. Trading crypto looks a lot like gambling. Studies report traders often show addiction-like behavior, anxiety, and depression tied to market swings. We check charts at 2 a.m. We tell ourselves just one more trade. Researchers warn, 24/7 crypto leads to compulsive checking and burnout. So FOMO isn't just a buzzword. It's backed by serious neuroscience and psychology. Would you take advice from a friend who only shows you their wins? In crypto, that's exactly what happens online. 84% of crypto investors admit FOMO-driven trades, yet only 17% fear missing a price dip. We panic when prices rise, not when they fall. Totally upside-down thinking. Imagine a drug where the high comes from just seeing the possibility of a win. Guess what? That drug exists. It's dopamine, released just by price alerts. Our brain is addicted to anticipation. Holding crypto during a crash hurts. Gen Z millionaires who piled in now watch Bitcoin volatility sapped 47% of their gains. Those who rode FOMO upward are now testing their tolerance on the way down. Each time, we're yanked back into the core conflict, impulse versus sense. We don't have to lose this fight. One clear mental model can help. Stop. Think. Plan. Plan. When the FOMO alarm blares, literally pause. Count to 10 before clicking buy. During that pause, ask yourself, what am I missing? That's your rational brain checking risks. Then ground yourself. Remember, almost everyone feels this panic, and 63% have seen it hurt their money. Next, lean on data and process, not hype. Write down a rule. If the market is surging because of memes, I must double-check fundamentals. Follow consistent strategies like dollar cost averaging or setting stop losses. Keep a checklist. Have you researched this coin? Does it fit your goals, or is it just internet hype? Finally, address those brain signals. When dopamine spikes, remind yourself it's just a chemical in your head rewarding almost winning. When your amygdala screams, acknowledge it. I'm afraid because I see others winning, but fear isn't data. Studies suggest this kind of mindful self-awareness helps traders resist impulsive bets. In practice, that means sometimes literally walking away, taking deep breaths, or consulting a friend who's not caught up in the frenzy. Mental model, the 3P framework. Pause, probe, plan. Pause before each trade. Probe your real reasons. Plan a data-driven response. This simple loop builds your cognitive capital, the mental skills to see through the FOMO noise. Remember, you're not alone. Even pros use plans and breaks to overcome emotion. Markets swing, coins crash, but your mind is yours to master. We've all faced the FOMO monster. What matters is the next move. Step out of the herd. Think like the rational stickman, not the one chasing fireworks. Develop your trading self-awareness. Build that cognitive capital. Because when the fear screams and greed shouts, we'll have each other's back, and our brains, to guide us. Think about that.